The strategy that I'm about to show you is a proven, back-tested strategy, which means that you literally just need to watch this video in full and you will be able to trade profitably.
Yes! 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 Yes!
That's it. You just have to watch the video. In fact, I even made this video short on purpose because I know the TikTokification of everything has ruined that little brain of yours. And this strategy is going to work on any market, whether that be crypto, Forex, the stock market. It is a universal strategy because it is based on pure price action. And if you're completely new and you want to take this strategy and use it to trade the crypto and Forex markets, I've left a link to the brokers that I use down below, which we will see in action later in the video when we have the live trade example.
Let's go!
Okay, so let's dive right into it. The first step is making sure you always know how to identify the trend because this is a trend trading strategy. We all know that an uptrend is defined by higher highs and higher lows, and a downtrend is lower lows and lower highs. This is like the basics of trading. But what people don't talk about is what happens when we get something that looks like this. Is this now a downtrend because we broke through this low here? No, it is not, because the low that we have to trade is the swing low. This is the low that we have to break in order to turn this trend around. And the high, if we break that high, then we are in a continued uptrend and we can continue trading in that direction. We like to call these complex pullbacks. When you're in a trend and you get something like this, the trend did not reverse just because you broke through this low. It only reverses if you break through this low here, and it continues if you break through this high here. As long as we're trading in between these 2 points, we are still technically in an uptrend. So that is step number 1. Know what swing you're trading in. So let's take a look at examples of both uptrends and downtrends that show this complex pullback phenomenon. So here we have a higher high, and then we have a higher low. We have a higher high, and we have a higher low. And then we get to here, and we do this, right? Many traders would say, oh my gosh, we broke through these lows. We are now in a downtrend. Let me take a short position, and they would get crushed. So making sure that you know the trend by constantly marking out your swing points out the range that you're trading in. So this would be the swing that we're trading. Now, why do we need to be able to identify the trend this way? It's because as long as we trade the trend in this way, where we know that we only reverse if we break through the swing lows and not just the short-term lows, we have a 60 to 70% chance of making another higher high or lower low. So if you're in an uptrend and you are trading the correct upswing, you have a 60 to 70% chance that you are not going to break this low here and you are going to continue higher, breaking through that high. If you're in a downtrend, it's going to be the opposite. Now, this is not an uptrend. We are still in a downtrend. Here is our lower low again, and then our lower high, our lower low. And now this is where it's going to look confusing. You're going to think, well, I have no idea what we're in because we're doing all of this. That's why we have to mark out the swing. So we got this lower low, lower high, lower low. What swing are we in? We are right here. Okay, let's go back over here. All right, this is the swing that we're trading. So we now have 60 to 70% chance that we are going to break through this low here because we are trading the trend properly. So what ends up happening is if you didn't mark these levels out, you may get lost in the sauce and not know what trend you're even in, because we do all of this chopping around between these highs and lows, but eventually the expectation of that lower low plays out. And now you know that you are in a continued downtrend. What does that really mean for us as traders? It means that if we are buying or selling in between these 2 points here, we have a 60 to 70% chance of making that lower low. So we are always trading in line with the market's expectation. Now, there is also another trick to make sure that you are always trading with the trend of the overall market, and that is going to be the 50 and 200 simple moving average indicators. And as long as you are below these 2 points, you should be looking for sells or shorts. And when you are above these 2 points, you should be looking for buys. So as long as you are buying above these 2 lines or selling below these 2 lines, you are also increasing your odds of trading in line with the expectation expectation of the total market. So again, we're just increasing our odds of success trading the trends. Now, the second part of this strategy is being able to identify levels of support and resistance alongside supply and demand in the swing that you've identified as the most recent swing / the most recent trend. I know that's a lot. Let's take a look at an example.
Let's go and do it.
We first identify the swing that we are currently in. That means we are now trading between this high and this low. If we break this high, we continue the uptrend. If we break this low, we are now in a downtrend and we look for shorts. But because we are in an uptrend, because we just broke this high here, we are looking for buy positions only. So where do we buy? One very important thing is to understand price action. And I have an entire video on price action on my YouTube channel that is very long and in detail. But for the sake of this video, let's just take a look at the price action here and break it down. We broke through this high. We also broke through this low here, which means that this swing right here is a trend reversal. We went from a downtrend to now an uptrend. This tells us that we now have to look for a pullback that is deeper into the swing because the sellers were very strong. We were in a downtrend and now we are in an uptrend. We are within the first swing of an uptrend. What does that tell us? Well, if we were just in a downtrend, do you think that the buyers would be able to go straight up with no hesitation? Or do you think there's going to be some sort of fight between the buyers and the sellers, which is going to cause price to retrace a good amount of this swing? The answer is the latter.
I understand now.
So using our knowledge on price action, we are going to look for a level of demand that is below the halfway point of this swing. Now we are only looking for levels of demand. It's only going to be demand because it's an upswing. We're looking to buy, so it's demand. We're only looking for levels of demand below this line right here. Now that only gives us this area of the chart to look at. We do not need to really look anywhere further because this is the swing that we're trading and it's the most recent price action. And so the level of demand is going to be the freshest.
So good and tasty.
Where are our levels of demand and how do you identify a level of demand? Demand is going to look like a consolidation or a small red candle or even a small green candle followed by an explosive move higher. Why do we call this supply and demand? It's because we have an imbalance between the supply and the demand of whatever we're trading. So for example, here we have a sharp move away from this area, which means that the buyers overwhelmed the sellers and there was an imbalance between buyers and sellers. There was a lot more buyers that stepped up very quickly to buy, and that caused a rapid price movement higher, which means that there are orders left sitting here unfilled.
Nice.
So we have now identified our level of demand here, which is also going to be our level of support. So this is our zone right here. This is where the orders would be sitting. This is where price moved away from very quickly. Usually the supply and demand levels are going to be very tiny because the area where we actually begin that movement higher from or lower from is a really compact area. So what I like to do is also use traditional support and resistance. And so I look to the left after I've already identified my area where I want to enter. You look to the left and now you just extend that box forward and see what price movements you can encompass into the zone. What I mean by that is that we have a bounce here, bounces all up in here, bounces here. So this is an area of support on top of the fact that we have an area of demand. We now know that this is where we are looking to buy because this is where the most logical point to buy is. It is an area where there is going to be an imbalance of buyers and sellers and unfilled orders, and it also makes sense with the price action because we are expecting a deeper move down into this retracement.
Great story. Compelling and rich.
If we play this forward, we will see what happens. But before we get into that, another crucial rule of this strategy is that we must trade a 3-to-1 risk to reward ratio. In this case, we would be setting our limit orders right in here, and our stop loss is going to be below this level of support. Give it a good amount of room because sometimes you'll get a big wick into that level. And we want to target now a 113 Fibonacci extension of our swing. That is going to look like this. Okay, the 113 is usually where price will turn around in an uptrend or a downtrend. It's like a stop loss hunt, right? You break through that high and then you immediately reverse. So our risk to reward is 3.7. That means this is a trade that works. And I usually don't put the target right at the 113. I'll usually put it a little bit towards the middle of the 1 and the 113 because now it's a 3.4 risk to reward. Let's see how this trade pans out. And by the way, there's that complex correction, which we were just talking about. This is not not a downtrend now just because we broke through this low. It's a complex correction into our level of support. And oftentimes you'll see an ABCD pattern within the complex correction. So that just means an equal move lower like this. And boom, what do you know? That's exactly where we turned around. Okay, so let's continue this and see what ended up happening. Almost got stopped out. That's what I was talking about. Sometimes you'll get a big wick in that area. And now you can see we are chopping around a ton, but we are remaining calm because this is still an uptrend because we have not broken any of those highs or lows. And there is a trade right there.
Here comes the money.
Here we go. Money talk.
Here comes the money.
So that is a buy example. A sell example, it's going to be the exact opposite. You are going to look for a supply level instead of a demand level and a downtrend instead of a uptrend. It's the exact opposite scenario. Now, another thing that is super, super important, only pick one zone to trade per swing, because if you don't and you pick out a bunch of different levels, you may get stopped out 2, 3, 4, 5 times in one swing down, right? So if you're buying here and you get stopped out, and you buy here and you get stopped out, sometimes that happens. Sometimes it looks like there's a bunch of different levels of supply and demand.
Sometimes shit happens. Someone has to deal with it.
And what happens is that you just get stopped out all the way down, and that is no good because you should be able to capture the next swing if the first swing doesn't work out. Remember, there's a 60 to 70% chance that the swing is going to continue. So you just want to take one shot, and if it fails, you have the next swing, which has a high chance of not failing. It's best if you just take one trade per swing, either one short or one long, but don't trade multiple trades in one swing. Alright, so I've just entered a short position over on Bitcoin on the 1 minute time frame. Let's break down the position. I still have some hope for this position due to all the factors that we're about to talk about. So here was our low, so we broke through that low, which means that we are now in a downtrend. So this swing that we're trading is going to be right here. Now, where in the swing do we have a level of supply? Since we're looking for shorts because we're in a downtrend and we're not in a very strong downtrend, so we should probably expect a mid to deep correction. So where are the strongest levels of supply in those areas, right? We're not taking shorts down here because that wouldn't make sense, right? We just broke through those lows barely with very little strength, so we should expect a move higher up towards the middle of the swing or the top of the swing. The area where we have the clearest and strongest level of supply is right here. We marked that out with this blue box right here. So it's going to look something like this, right? Why? Because when we take a look to the left, we see all of these little areas where price reacted in this blue box here. And on top of that, we have this strong level of supply right here. So our profit target is just going to be below these lows at the 113 Fibonacci retracement level right here. Now you can see that is the risk to reward for our trade. It is a 3.66 risk to reward. Our stops are well above that area of resistance just to make sure we don't get stopped out early. If you're wondering what this big blue rectangle is here, that is actually a level of demand on the hourly time frame to 4-hour time frame.
All right.
Why am I entering at a level of demand, right? So it might sound a little risky. The reason being is that we've hit this level of demand many times. And so that means that there shouldn't be many orders left here. So it's no longer going to be a strong level of support. And so I'm okay taking a short given the shorter term trend being lower and the strong level of supply we have right there. That is going to be the trade for today on Bitcoin over on Femex. If you want to trade with them, just make sure to use the link in the description down below. It takes 5 minutes to set up an account. So we're just going to roll the time lapse and see what happens with this trade. Okay, so it's looking pretty good. We have just broken through those lows, so stops are now at break even. Our target is just a few points away. I hope we can just get a quick push up there. I don't want to hang around this area too much because that may be a sign of a false breakdown. I'm not liking this price action. We are quickly turning around right after breaking through those lows, and we're seeing the buyers entering the market. And we are up quite a bit as far as risk to reward goes. We are up 2.61, which isn't too bad. So I'm going to probably close this position if we break and close above this candle here, and we are doing that right now. So if that closes, I'm going to get out here just to prevent a false breakdown, and we are out. So that is the ultimate trading strategy. If you enjoyed the video, just make sure to smash that like button and subscribe and share the video with a trading buddy. If you want to open an account with Femex, the link is in the description down below. That's the crypto broker that I use. Thank you for watching, and I'll see you in the next video.